Kathleen talking about the Fed's latest move. What do you make of it? Is it a cut at the right time, or is the Fed at risk of being behind the curve?
Well, it's not surprising they did the cut. Everybody expected it. And I think a lot of it is what we'll be saying afterwards in an analysis of, will there be another one? Many people were pricing in more moves this year, but coming from what I picked up in a very short period of time, I think that's in question. And maybe that's enough for now, given how the curve is steepened a little.
But when you take a look at the data coming out of the U.S., it seems pretty solid enough for not warranting another cut, and yet here we are seeing another cut. What's your assessment of the U.S. economy? Are you as comfortable?
I look at it this way. We at Barings look at it from the standpoint of, we believe there's fundamental strength to the U.S. economy led by the consumer. You still have a tight employment market. You have numbers of industries like technology that continue to grow. Now, you do have noise from the trade war that is slowing business investment. And certainly entering an election year, there's often a pullback in business investment when that occurs. But none of those are catalysts for a recession. That said, if things do continue to slow, if the consumer pauses, you could go into a recession later in 2020 or beyond. But even if you do, we think it'll be mild. We're in that sort of modest growth phase for a while. Given
the scenario that you've just painted, in terms of asset classes, anything looking undervalued or overvalued at this point in time?
Barings, we're very constructive on credit in particular. We especially believe that leveraged loans in the U.S. and Europe are showing good value, actually trading at wider spreads than U.S. high-yield bonds. So we've seen good flows into that asset class, and defaults remain low at this part of the cycle. The other area, there are parts of the real estate market, once you get out of core markets like New York and go into some of the growth markets like our headquarters city of Charlotte or Austin or Nashville, there's good opportunities in light industrial and in apartments. So I think it's a matter of also looking across the world. We do think there's good opportunity. In particular, we see very good opportunity in the long-term growth value of Asia.
Okay, let's pick up on Asia. A third of your assets are in this part of the world. Where do you see that opportunity, and what do you make of the Chinese market?
Well, our business in Asia balances between our local-to-local equity and fixed income businesses in Hong Kong and Korea, and more recently, last year in China, we opened our office there, and also investing broadly across the region, things like direct credit or infrastructure debt. So clearly, even though there's at times a slowdown, or there's a slowdown in China, there are large infrastructure projects and overall growth in the different markets. So it's a matter of just following the growth and finding value. And there is value because these are newer markets. They're not overbanked, if you will. And so we often see, for instance, good value in direct lending, direct credit in the region.
China, of course, seeing a slowdown in its growth. When you take a longer-term perspective, what do you see as the biggest challenge China faces in the next decade?
Like a lot of countries, both even the U.S. and Europe, you have demographic changes, reduction in population that are creating some challenges for the future. At the same time, technology, not just the physical technology, but the application of it, is disrupting a lot of industries. So it's balancing that and getting the next generation of talent to be able to assume the new careers, if you will, while also sustaining your older generations. So I think there's a lot of similar challenges around the world. To me, a lot of it comes just with the changes in the economy and the nature of jobs.
This conference is focusing on Asia at a crossroads. When you take a look at Asia, what is the biggest risk? I know you talked about how there's great opportunities in this part of the world, but what's the greatest risk for the region?
I think, like any region, I think a lot of our risks today is a little bit man-made. I think it's, we have a lot of politics like the trade war between U.S. and China. While it plays out in traditional industries, it's really about long-term IP rights. And so I think how do these arguments, if you will, play out is a risk to economic growth, not just here in Asia, but in the US and Europe. I also think just the demographic changes and preparing your society for the shift in the job market is a challenge. But I think there's great strength in Asia too. It is growing. There is a young base that is adaptable and a lot of growth in industries like technology that fit very well in the region.